Turn our attention to global restaurant stocks. Yum Brands, McDonald's and Starbucks. Yum Brands is a $40 billion corporation which owns KFC, Pizza Hut and Taco Bell and has recently expanded rapidly into China. McDonald's is the world's largest restaurant operator with a market value of $100 billion. And finally, Starbucks is focused on coffee and related dining options and is a $45 billion global player. Let's start with Yum. And Paul, we know that you are very hot when it comes to the global brands out there. How do you feel about these players?
I was keen to discuss these tonight because, we're talking about how attractive this is as an investment theme. So that's fine. And we've talked about the local options available to JSE investors, but we are seeing more and more people invest internationally now. And I think you do need to talk about the global context. So Yum is not the largest, it's kind of up there, and as you said, it's got those three brands, but we associate it mostly with KFC because they're very active here in South Africa. They were probably the first big mover of the global players into China, and China's worth putting on the table because 1.3 billion people coming to the urban areas, very brand conscious and very keen to show that they've arrived in the kind of modern world by consuming products inter alia these ones. So, obviously not everyone can afford...
You can't really relate KFC to your Cartier.
Exactly, but obviously not everybody can afford a Cartier watch, and this is one of the ways that people arrive, working in their first job in the urban areas, wants to kind of experience the world, is to be dining at these kinds of places. The McDonald's thing is the same, but McDonald's has got a very
Before you go there, I want to throw it down to Craig in Cape Town. Let's just focus on Yum for a moment. They're, Paul, making the correlation between a Cartier and, I assume, KFC. Nice entry point into elevating your profile out there if we can buy KFC rather than Cartiers, don't you think?
Yeah, I thought they were more humble brands, but I suppose it's one of perspective. The Pizza Hut brand, the Taco Bell brand, all very strong brands. And what's nice, again, as I've mentioned, I didn't like about some of the other local players, this company's focused on getting his three brands out there. McDonald's focused on really getting one brand out there. So that's nice. It's a focus strategy, and of course Asia is a big part of it. They've changed over the last 5 years, where it was 50% US, 50% international. It's now 75% US, and 58% of that is emerging markets. So it's been quite interesting, that change in focus, but using the same brands to get into Asia and other parts of the world.
I anticipate you're going to tell me that this is hot, Craig. Yum.
Well, look, the market will tell you that. If you look over the last decade, the share price has gone up about 350%, whereas the S&P has gone up, say, 20%. Or it's comparatively, it's been a very good growth story. And just out of interest, they've grown since 2006 to the end of 2011 over 4,000 stores, whereas McDonald's, which we'll speak about at the moment, has grown 1,800. So
we're running out of time, so I've got to interrupt you there. We're going with hot still in your book on this one, on Yum Foods.
Hot still, I'd say hot. Yeah.
Yep, happy to be buying these, although we prefer McDonald's.
Quick comment on McDonald's. Well, there we go. It's hotter, McDonald's.
Yeah, and it's bigger, so it's got more global experience, much bigger in Europe, which people currently think is finished, but I can assure you it's not. Still lots of money there for buying of hamburgers. So I think the issue of health does come up with these fast food companies. People say, well, obesity is a concern. How can we be supporting these kind of stocks? But something important to notice, they are shifting to healthier menu options, and they're very sensitive to local preferences. So, if you go to a McDonald's in India, everything has got chili in it. That's not the case if you go to other countries where people are more concerned about vegetarian eating and so on and so forth. So we do think that people will address these things over time, and that we move into a world where outsourced casual dining becomes a much bigger part of people's spend.
Hot or not for McDonald's?
Definitely hot. It's around $100 a share. If you buy them in New York, we think that's a good price to be entering them.
Craig, do you agree with what Paul has put on the table?
I think it depends on your strategy for buying. With McDonald's, you buy them, nice dividend yield. They pay a quarterly dividend, works out to about 2.5% on the current price. And they buy back their shares, so they get some of their growth that way. So it's nice because it's cash generative. It's actually not that much bigger if you look at the number of, in fact, it's actually smaller, 33,000 franchises as opposed to 38,000 outlets in Yum, and they operate in only 4 more countries than Yum. So they've grown slower, but they return that cash. So if from that point of view, it's hot if you're looking for a return on cash.
You've got 30 seconds on Starbucks, Mr. Tehran.
Yes, look, Starbucks was, out of Seattle. It's the coffee stuff, but coffee's got even better margins than pizza. It was kind of dead. Howard Schultz brought it back, and it's done very well, and it's the hottest brand in China. People walk around in China with the logo on the front, to show that they are part of the modern elite.
Hot or not?
Definitely also one to add to the list.
Craig, hot or not for Starbucks?
Extra risk because almost half of the stores are company owned, whereas the others is about a 20%. So from that point of view, not hot because it's a different business model.